Hi, good morning, all. Good morning to our live panel discussion. Happy morning to everybody present over here. The topic for today's panel discussion is ITC claim. Yes, we have been hearing a lot about ITC claims, but now we have eminent speakers at this sessions going to speak what is most challenging or what is the challenges which are coming in 2022 regarding ITC claims and how automation will actually help us bring in compliance more easier. So that will be our today's topic. We'll start the session. I'll just give a brief overview on today's session. All right. So if you see the state of mind for the CFOs is one side is to comply with laws and regulations, and the second side is to have a very optimal tax savings or optimized tax savings for the company. Now, the wish is from the two sides, but being in this challenging environment where GST changes every alternative months, CFO are like, in a fixed mind trying to wrap up their things, whether they want to hold any payment or they want to have a optimized tax saving. That doesn't go hand in hand in view of the latest compliance and amendment which have brought in budget changes. They sometimes also there are a few cases where they have like lost good amount of money on the table, right? So that have been saying further, the ITC amendment which was brought in the beginning of this year and the new section 38 proposed in finance bill 2022 have created a need that we start looking out for a very robust mechanism for ITC claims going forward. Okay. Now, previously, if you see the law, it was GSTR 2, then 2A with 20 percentage, then it boiled down to 5 percentage. The budget introduced a section called 16, now it is only 2B, and so on and so forth, right? It is keep changing here and there. Now we are in the era where it is like a supplier linked ITC claim system, right? That is what is the government pushing, and it becomes very challenging to adhere to this compliance while GST care.
We lost your voice.
Rohit, you're no longer audible. You're on mute.
Yeah,
You're on mute.
Rohit, you're on mute. Rohit, you are on
Rohit, you're
mute.
on mute. Yeah. No, we still can't hear you. Rohit, we can't hear you.
Rohit, you are on mute. Rohit, you are on mute. You are, I mean, you're unmuted, but we can't hear you. I think you, could you say something?
No.
We can't hear you. Maybe it's not plugged in correctly. No, we cannot hear
Rohit,
you,
we can't hear
Rohit.
you at all. Can you hear us? Can you hear us?
We can't
Right.
hear you. So it's either not plugged in well or
Or try working without your headpiece. Maybe it works. Maybe your laptop audio will take it over.
no, we
No.
can't hear you.
uh, Hello, Denzel, can you hear me now? Perfect. Sorry. So where did we miss? Did I complete the intro? Did I miss there?
I think you can go back about 20 seconds, 20,
Yeah.
25 seconds.
Okay, fine. So, just giving a brief overview of how CFO becomes in a fixed situation, right? One side, there is like if you stop the vendor payment, the business also get at a loss, and if you don't stop vendor compliances more, then the ITC becomes a problem, and there is not an optimized way of tax saving mechanism. Okay, now what I want to bring on the table is the ITC amendment which was brought beginning this year, okay, in the finance bill 2022. See, ITC have been ever changing, starting from GST at 2, then 2A plus 20%, then 2A plus 10%, then 2A plus 5%, now it's 2B. Moving forward, government is thinking in a phase where it's all supplier linked claims. Okay, that's what government is bringing on, because they also have found that restricting ITC, they are saving a lot of funds for themselves as well, for various other reasons as well. And ITC is also for them a good mechanism to catch hold of defaulting vendors. Right now, it is very challenging, okay, to adhere to compliance as well, and while keeping the GST cash outflow at a minimum without the right tools and technology. This panel here brings how the latest changes of GST have been challenging the ITC claim process, and how automation can bring out ease in compliance to a very large extent, so that we have a very optimized tax outflow. Okay, let me introduce all the speakers here. Okay, starting with Uday sir. I think Uday sir's camera is off, but yeah, Uday sir comes with a 25 plus year experience in leadership across healthcare, petroleum, pharma, IT, hospitality, consultancy, fundraising, cross border managing, mergers and acquisitions, technology. Several years of experience he have been in CFO, CIO, so he understands the ground reality, what each company started facing in terms of GST, and what are the issues what sir is having in industry specific, right? The second on this, we also have Varun Raj Khanna sir, which is senior VP in Bharti Airtel, right? He is a seasoned professional with 25 years post qualification experience. He has undertaken core finance roles and head of finance as and taxes as well, corporate strategy team, M&A team, business development. His career spans stint in industry as well as in consultancy world. We welcome you as well, sir. Right. The third we have is our Rajiv Nevar sir, who is a group CFO of RK Swami BBDO. Now, BBDO, everybody knows it's a leading India company in media, advertising, analytics, and research. Rajiv sir especially has 3 decades of experience in leading business houses, which spans across the Tatas, the Birlas, the Rahejas, and the DMAC group, leading functional excellence in the finance segment. Right. And the last, we also have Ashok Rao, sir, who is CFO of Paragon Footwear. We also welcome you, sir. He is currently the CFO and company secretary of Paragon Footwear, and has over 30 plus years of experience covering areas of strategic finance, optimization, controls, funding, merger and acquisition, tax management, risk assessment, and all types of digitizations which you can come across. Right. So let's begin this panel discussion with the first question. I'll start the question with Varun Raj sir from Bharti Airtel. Like, sir, how has been this ITC claim evolved from the beginning of the GST, and why is this government suddenly or in the plan of making supplier linked ITC claim, which never ever we saw it in the service tax regime, never we saw in central excise, never we saw in VAT, and all the other previous laws. So it's like the first time we are seeing. And why do you feel that this will actually happen, and how is this going to affect this enterprise segment?
Sure. Thanks, Rohit, first of all, for having me on the panel. Happy to be here. Uh, I think pretty much laid it out in your introduction in terms of the evolving scheme of how ITC claims have developed over the last 5 years. We're just about 5 years, getting over 5 years of GST, and we've seen multiple changes uh, in the law in terms of the manner in which we are supposed to verify or make a claim on ITC. Like you said, it was supposed to be on a provisional basis, then total 2B, 2A plus 20% going down to 2A plus 5%. But this all in the middle, we had this Annex 1 and Annex 2, which the department thought that they'll put in when GSTR 1, 2, and 3 were indefinitely postponed. They came with Annex 1, Annex 2, never implemented. I think there's a clear desire. If you look at this one common theme across the entire set, which is that the government says that you can take credit only if I have got that tax already paid to me. Okay. I think there's a definite realization by the government saying that it cannot go and audit every small taxpayer, and perhaps a lot of the non-compliance is actually happening at the lower, at the base of the pyramid and not at the top of the pyramid. If you look at the 500 crore plus companies, they're not going to do tax evasion; they're going to pay their taxes. But they might not be availing ITC in respect of taxes that the government has collected. And to some extent, I see this as a means to put the monkey on the taxpayer's back, on the large taxpayer's back, saying, okay, you verify your vendors, or rather help me. I think until then, it's perfectly fine for all of us to be good corporate citizens and ensure that our entire chain is compliant. But where it becomes punitive on the taxpayer, saying that I've paid the tax, I don't get credit, and I have to pay interest and penalty for wearing it, I think there is a bit of an overreach. But I think if you look at the reason behind it, it's the government's clear understanding that it can't go and regulate all the taxpayers and wants a larger taxpayer to help govern them.
Right, right. Well said, sir. Well said. I think you have made it the right point. The government looking at triggering the large corporate, if their suppliers are not proper, you withhold something. That's where the TDS 206 has come. That's where the GST laws are changing, and it's going forward. Even like one of my client was in a fixed mode where his 10% of the vendors he had to deduct a higher rate of TDS. That's where the procurement team also understood, and they made a match fixing of with the vendors, identifying new vendors and course correction. Right. Well said. Well said. Right. Let's go on to the next question. To first, Rajiv sir, is what do you think, sir? What is the biggest compliance challenge in GSTs, and why is that a biggest challenge?
Okay. Hi, Rohit, and hello, co-panelists, and thank you for having me on the show. See, my belief is that when GST was being unraveled, at that point in time, there was a certain objective to basically ease of doing business. Somewhere, I think we have lost the intent. And it is now becoming difficult to do business. Okay, so that's the first thing. But the kind of challenges that we have been facing, they have changed. Initially, when GST came in, I think the challenge was the skill set. Basically, a lot of people did not know about GST, which is something which the corporate India was able to navigate through and manage. The second thing is basically no precedence as far as, because what is the right step, what is the wrong step, is this right, is this wrong? So clarity. I think over a period of time, whilst we have more or less understood the law, these small tweaks and changes that is happening in the law is making the business difficult. Right. So at one point in time, it was the understanding of the law that was difficult. Once that we have started understanding the law, the business has become difficult. Correct. Because finance is a lifeline in any business, and working capital is critical. When you lock the working capital for no fault of yours, it's a concern. So the challenge here is not understanding the law as much it's a hardship on the business. So those are my points.
Absolutely. I think you are also bang on the point, sir. First, it was understanding the law problem. Now, when we have understood law, they have made small tweaks, making little bit business difficult. Uh, One point here also I would like to understand: the large corporate will have a dedicated team, dedicated resource, so the changes, the law, the knowledge can be flown, and they can do stuffs which is quite not possible for the uh, less turnover companies, right? The small suppliers will still take a lot of time to understand. As you know, it is called for e-invoice. They have given just the 30 days timeline for 20 crore plus turnover companies. Now many companies came us and said that please have a session, what is e-invoice, how do we start, and how do we actually gear up for that. Rightly said. We will also like to get your point of view, Varun Raj sir. What are like the biggest compliance challenge, and like why are that still there?
Sure. So I agree with what my co-panelist said. That GST started off with ease of business, and now it's frankly becoming difficult to do business because it's being used as a tool. I think I call this a 2% problem. 2% of taxpayers are perhaps not paying the taxes, and the 98% who are actually paying are suffering the cost of those 2%. And that manifests itself in various ways. You look at this entire ITC matching concept; it's for 2% of the issue, or maybe even less. I talked to the tax officers today from, down from a deputy commissioner up to a civic member, and there's general consensus that um, tax evasion is much lesser today. That the system is getting more compliant, but there are faults. Okay. The other huge problem with what is the GST compliance issue is today in dealing with the unknown. Okay, we don't know today what interpretation will come up tomorrow by saying that if one entity has 20 different GST registrations, it's still the same legal entity. You can't treat them as 20 different companies. I think this desire to treat every GST registration as 20 different companies, so the head office is rendering a service to the other branch offices, or if you have a large corporate group, the shareholder function is a service being provided to other subsidiaries. You can't create a transaction. GST was meant to tax a transaction, not to create a transaction where there is none, and not to dissect a company into multiple parts. Okay, that is not the objective. But because it translates to revenue, that's how it's being viewed today. I'm personally hopeful that given that revenues are now stabilizing at 1,25,000, 1,30,000 crores plus, which is a reasonable amount, the government would or the machinery would now kind of be a little bit more pacified and get down to administrating the law the way it was meant to be, rather than extraction of revenue. I think that is the huge compliance burden for me. So the compliance burden is not there. We've all learned how to file our returns. We've all learned how to deal with our volume of ITC in a dispersed manner. I think most corporates have learned it. I have a slight difference of opinion saying that I think it's easier for the smaller taxpayer to comply than the larger taxpayer because the number of moving parts is a lot lesser. For a larger taxpayer, the scale itself is a huge challenge.
Correct. Right.
Okay. The other huge challenge in me, I was going through a statistic recently. We are, like I said, almost completing 5 years, so around 1,600 days. We've had 1,400 changes to the law in terms of 800 odd notifications and 600 circulars. So that's almost a change a day on an average. And I'm not counting changes in law up till now. That's a huge challenge.
Got it. Absolutely, sir. Even from audience, Ashish has pointed out that uh, like the DT, there is only one budget, one change, and there are few notifications or clarifications or advance rulings. But the GST, every GST council meetings brings out 5 to 10 different changes. Plus, there are midnight notifications. Plus, there are regular clarifications and all. Yeah, that problem is finicky as well, as we can say, right? Absolutely. Now, moving on to our next question. To first is Uday sir. Now, Uday sir, how can a CFO ensure better ITC management, that is cutting their losses? Do you feel that unblocking ITC or wrongful claims or avoiding irregularity and so on, how do we actually better manage our ITC?
Happy morning to all of you. Thanks for having me in, and thanks for my co-panelist. I think it's a very important thing that we are going through. Let me spend a minute on the last 5 years, or even last 7-8 years, I would say, from the service tax regime to the GST regime. I think we CFOs here are guinea pigs for getting the country to a stable position in terms of getting the processes right, systems right, and setting a foundation for the coming decade is what I think. I think we are moving in the right direction, but I agree with my co-panelists that there is a lot of uncertainty and in terms of the way they're changing the laws back and forth. Probably it is warranted from one side, from a revenue collection angle, and also to arrest evasion, but they should be mindful that there are large corporates who are actually being compliant on tax front, so they should support. And I, being in healthcare now for long years, I felt that we've been talking about importance to a particular industry / a particular sector, but that is actually not trickled down in reality when it comes to implementation side. And I'll answer to your question specifically that the entire education burden of the GST is handed over to the corporate like us.
Absolutely.
We have started doing trainings to our vendors. Gone are the days where we selected vendors basis the quality and the pricing and the timely delivery of goods. Now we have to educate. Are they going to be compliant? And if so, how do we make them compliant on GST? So this is the fourth burden or a criteria that we have for selecting a vendor now. Now, government has conveniently passed it on to us, similar to what they did with direct tax regime. This is the same thing they're adopting for the indirect tax regime, right? So we said TDS needs to be directed by the corporates. And similarly to TCS regime and the Form 16, now people are saying Form 16 is not required, just go and see what is there in credited TCS, that is final. Same thing they're saying, I don't agree with what you have paid, but whatever he has actually loaded onto this one is what is important. Now, the best way to do that and how we are managing is educate the vendors. Now, easier said than done. We still have 10 to 15% of our population of 4,500 vendors that we operate. Still, we are having challenges. That means similar to what my other co-panelists said, working capital issues. As it is, healthcare partly is exempted, partly is not exempted. You're having this chunk. We're losing good 3 to 4% of our revenue on this. It's a huge strain on the cash flows of the company.
Got it. Rightly pointed out there as well. Ashok sir, even if your point of view, like how can CFO ensure better ITC management and cut their losses, which means avoiding irregularities, wrongful claims, and unblocking ITCs?
Yeah, thank you for having me on the call. Like how Uday said, a lot of things have to be done on a concurrent basis when transactions happen to ensure that proper ITC are being taken. It has twofold. See, if you look at our P&L account, essentially what it says is apart from your input raw materials, apart from interest, depreciation, employee cost, most of the expenditure incur GST when you acquire the supply of goods or services. So it's imperative of the CFO to ensure that they ensure that this the tax team maps the expenditures or transactions to the whether it's eligible or not based on the HSN code or otherwise. See, this is similar to when the statutory auditor asks whether TDS has been deducted properly for all the expenses you are liable to deduct TDS. But GST is far more wider. The CFO has to ensure that all what has been required to be taken has been taken properly on the right head, and whatever like how they was telling the expenses like employee related or any blocked credits are not taken, leading to wrongful claims are also avoided. So that should be mapped when the chart of accounts are set up. Hopefully all the softwares now have such a feature. Otherwise, you can always have an add-on module, take the help of software houses like ClearTax or any other software vendor to map, wherein you can digitize and use AI and try to integrate and take all the credits which you are supposed to take, and also avoid the ITC which we are supposed to avoid. The second part was discussed by the other panelists is to ensure that there's a proper vendor management, like how Uday and the previous speakers had said. The agreements with the vendors nowadays should have that they are bound to file the returns properly, and you can hold back their GST in case they don't do so. It may so happen that 80%, 20% of the value of the GST credits are from 80% of the number of vendors. So, and many of them can be MSMEs also. You cannot go back and hold their entire bill. So there should be a proper agreement, a revised vendor management portal, and also a communication system to demonstrate that you are not held back the money just for any other flimsy reason. So if the software which you're using for ITC and GST, reconciling the GST, has communication pattern with the vendor, which you may probably have or consider, then probably the documentation or management part also is taken. So to summarize, you need to have both eligible and non-eligible management, and also a vendor management like all the other speakers have said. And that's where you ensure you don't avoid cutting down all those ones. Yeah, thank you.
Right. Absolutely, sir. I think the main key area in your wordings also is having a legal agreement with your vendors, having the clause that if they don't file the returns, you can block some amount, which is the tax component and all. I would like the audience to have this important conversation, because there is one case which is pending against MSME where a big corporate has held back the payment and was having this particular clause in their legal agreement, and to everybody's surprise that was in favor of the large corporate. There is again one level ahead the case has gone. In between the time, the MSME also filed the return and the claim was done and the payment was made, but still the case lies in the jurisdiction of whether it is rightfully to hold the tax component of any MSME. The answer still lies: have a legal agreement set with your vendors having these particular clause that your payment can be blocked in terms of irregularities in the GST returns. So that will save a lot of corporates as well, and also act as a prejudice to the non-filers, even though they are having MSME and they have the right to receive a 45-day payment. Right. Moving on to our next question is to Rajiv, sir. Sir, how do you think CFO should make the most of this particular digitalization to engage with the business ecosystem, that is the supplier, the vendor, the customer, the employee, and increase its profitability and effectiveness?
Okay. So thank you, Rohit, for this question. Very simple answer, that you can either work smart or you can work hard. Working hard or working smart, whatever you choose to do, you need to deliver the outcomes. Now, I always believe that if you can deliver the outcomes while working smart, why work hard? You may call me lazy, but that's how, that's the approach. Now, if you have to work smart, you need to think, what can you do differently? If you want to work hard, you don't have to think what you need to do differently. Okay. Now, my view is that if you look at the various activities which are done within the finance function, I can broadly categorize into two clear buckets. One, where you need management intervention, and one which are transactional. Management, you may be called manager, you may be called a vice president, whatever. I'm talking about the role. Either the role requires management intervention, or the role requires, it's basically a transactional role. In my view, the entire transactional role that is done in finance is actually, it's like a repetitive and a pre-rehearsed. And it follows a very clear flow chart. And today, therefore, technology clearly helps you to address this piece very effectively and efficiently, and in a zero error approach also. So I don't see, so therefore, from when I look at from procure to pay, technology is not an option anymore with the kind of regulations and everything that are around us and the kind of changes. You cannot have manual dependency anymore. You will have manual dependency to oversee, not to do the transactions. So for me, my belief is wherever I've been, I have always advocated technology, and we have been successfully implementing technology right from procure to pay, and that has enabled us to take our minds off a lot of these, if I may use the word, kits. Okay, and you are focusing on what is relevant from the business perspective. You get more time to do business partnering, you get more time to do business development, you get more time to do M&A and those stuffs. Because, sorry, if I may just use a term here, there is something, as finance guys, we always look at return on investment. There is another KPI that I would like to share, which is return on management time. Mm-hmm. Management time is limited. If you have to get a return from the management time, you need to optimize your management time. And therefore, when you talk about digital, when you talk about technology, I don't think it's an option. It's a clear winner. You have to embrace it. But what often comes in your path are three things. One is basically your risk appetite. A lot of companies feel, chal raha hai na, everything is fine, why change? So your risk appetite has to be there to change it. There will always be a lot of resistance. So whoever is a leader needs to have has to be convinced, and needs to have the conviction that we need to embrace technology. That's one. The second challenge is most companies have some form of technology, but it is not an end-to-end technology. So the fact is that when you do a plug and play of various technologies, the problem is, will it integrate well, or it still will be kind of a scattered technology? That is a big challenge I feel today. The last thing I feel is basically the skill set. People who are used to manual processes find it very difficult to embrace technology. Again, you need to help them through the training. If they can't train, sorry. So you have to take some hard steps here. But my view is very clear. Technology is inevitable. There are lovely, great technologies which are there for the ERP and others. For some of the other tools, there are obviously plug and play technologies like ClearTax and others, which can obviously be used to enhance your entire thing. And what it can't do, as I said, the problem remains. I said everything can be achieved. What it can't do, what technology can't do, is a working capital management.
Absolutely, sir. Absolutely. Two key things which I also take is enterprise having the risk appetite to be the change, and the second point is the end-to-end segmenting, right? The technology being end-to-end. Again, Rajiv sir, a top-up question on that is, how has the technology you seen being a game changer in simplifying the compliances and mitigating the risk of non-compliances?
Okay, so I always believe that human mind always has a limitation. Now, I'll give a simple example. Whether you talk 5%, 20%, whatever the rules may change, the fact is you need to optimize. Since we're talking about GST, I limit myself to GST. We can obviously go into many other subjects. Now, the fact is you need to ensure that your working capital is not blocked. Now, to ensure that your working capital is not blocked, you need to identify where is your working capital getting blocked. If identification of that process itself is quite laborious, it's a very challenging situation, number one. But a tool, an automation, can actually help you identify that and make you focus on what interventions you need to take. So you save on the time of identification. That's number one. Number two, when you look at technology or any such tool, the biggest thing is that you are also heavily penalized by various laws, including GST, for non-compliances. It's very important to know where are you possibly getting non-compliant. And to identify that, you need technology. So my view is, again, connecting back to my earlier point, technology will get you to a certain stage and a certain level, which is the transactional piece. Beyond that, the management intervention has to be yours. That no technology can do it for you. But identification itself in many companies has been a very, very difficult process, as I would say, which technology can clearly help you to do it. Number three, last point, is that if you don't have a procure to pay end-to-end solution in your company, if there are a lot of breaks in this whole journey, you will have challenges. And so sometimes it is necessary that the architecture of this entire, sometimes we get very connected with the technology that we are already living with for all these days. I personally feel we have to emotionally detach ourselves from whatever platform we are using and look at the architecture with a fresh pair of eyes. I have had very good experiences. When I was with the Taj Group, I was heading the group finance for the whole group. We migrated to a system where we had option to upgrade. Instead of upgrading, we chose to completely change the architecture. I have moved on from Taj, but I can tell you one thing, that the architecture that was put in place works beautifully today. We have also, when I was in Dubai, we implemented a similar but a different approach there. It's working beautifully there. So my belief is I'm sold on technology. I don't think there's a discussion in my mind on technology, but technology can help you up to a certain level. Sorry, one bonus point I'm going to say, I'm also a strong believer in AI. Now, transaction piece can be done. The part which was basically management intervention, again, to a large part of the first part of that can also be done by an AI today, which will be very surprising. And in days to come, AI will take most of the calls that we need to take today. So that's my answer. Sorry.
Absolutely, sir. I also believe in that. A lot of management related calls will be driven by AI led insights, which currently is being derived by a lot of enterprises. They have already started using, say, 10%, 20%, 30% going. There is a long way, but definitely AI will actually take a lot of management related calls, and even compliance, technology, everything is going to happen, right?
Rajiv, can I come in here?
Yes, sir.
Yes, please.
No, further to what Rajiv was saying, I think clearly the transition that today an accountant is making, and I draw this analogy between a barber and a saloon. 10 years back, we said we went to a barber. Today we're saying I went to a saloon. The munshi, the erstwhile munshi, today is taking a shape of a business finance role, because that's where majority of our CFOs in this panel and all the listeners here are spending time with the business mode rather than focusing on the day-to-day transaction. And I can't disagree with Rajiv that you need to break down your entire workflow, whether it is accounts receivable, accounts payable, or tax compliance, into where you're doing manual, semi-automated, and automated. And the first two, you have an opportunity to make it automated. And I think the moment we start looking at each of the processes in each of the areas that we are working today with the organization, and wherever there are manual and semi-automated, you have to start making in automation. And I also agree with Rajiv in saying, in terms of what he's talking in terms of the introducing bots, and this is very, very critical. I have done this and we have made immense benefit. I'll just take a second more. In a healthcare industry, I'm sure all of you face this problem of pre-authorization when you get into a hospital. You have to wait. You don't know what is going to happen. Suddenly there is, nahi, isme cashless nahi hai. Now, all that story, right? So we have used bots to automate the entire pre-authorization till the bank reconciliation. We have to deal with 40 different third-party insurance companies and governmental bodies, both central and state governments. And if you don't automate, the whole working capital issue, what he's talking, is going to will not be a surprise. It's going to be the problem day in, day out. So I think automation, breaking through the entire workflow of each and every work that we do, and converting the manual and semi-automated automation is the way to go.
Absolutely. I also upheld that. Even whenever we change up any organization, the first thing we look out is where is the manual and where is the semi-automated, break into things. What can be automated? We try to do a small ROI. If that benefit is good, then we automate it. If we feel that transactions are going up voluminous, then we don't even look at the ROI. We just go ahead and fully automated approach. Absolutely with that view, sir. Right. Moving on to the next question with Varun sir. You would have seen a lot of automation rise during your entire tenure, right, sir? Um, why should we look at GST automation, and how will it matter to a CFO?
So I think, so you're right. I think automation has already increased, like Rajiv, they've already mentioned, it's become a daily part of a CFO's life or any senior finance professional's life, that you have no option but to automate. GST has made it all the more incumbent because, if you just take it to the pre-GST era, you had VAT, you had multiple laws, but they were targeting a very small subsegment of your total number of transactions. So you could afford, perhaps incorrectly, but you could still afford to live without automating because you could do some things manually. I think GST is in that sense, I think it's been a boon, because some of us are realizing today the benefits of that automation, not only for tax compliance, but also for analytics. So what Rajiv mentioned as management time, I personally have found it that using GST data, we can actually has actually helped us do a lot more analysis than waiting for month-end closure. That is actually actual transaction data. Of course, there's a difference between billing and revenue, etc., and all, but it gives you a good second option of how to view your own business's data. All right. I don't think GST management, even basic compliance with the law today is possible without automation to any level. Ideally speaking, as I see it, your output side is fairly simple. It's the input side which is more difficult. Okay, and businesses should be able to have their ITC register being automated and coming out of their chart of accounts. So I think Uday or Sarao mentioned earlier about how the chart of accounts needs to be adequately positioned. I think that alignment has to start from COA, not from reports. If it's not there at the root cause of the way your system is built, it's not going to work. All right. Working capital management, each speaker spoken about. How do you know where your ITC is getting stuck? Which are your vendors who are typically non-compliant? This is only going to come out of automation. And how can you slice and dice the data? We actually did analysis, okay, and we found that 80% of our non-compliant vendors are in one business of ours. Okay, and we were finally able to track it down, not through the business function, but through an HSN. Okay. Now, if you had automation, and Rajiv mentioned this, that you take time to just discover the problem. If you had automation, you discover the problem a lot earlier. And then the intervention is very simple. I think the solutions are simpler. It's the problem identification which takes time. 3B versus 2A will show you data about how much of a mismatch it is. But how many of those vendors are not even filing a 3B? How many of those are in a certain sect? Are they only hotel industry? Are they, what kind of a expense and how critical is that to your business? Because you can't, if you just kill it, you have a business stoppage as well. You have a business continuity problem. So I think that automation is extremely necessary, even within the GST context, not only to be compliant, to stave off penalties and heavy interests, and actually get down to solutions.
Absolutely. I think problem identification was the point. I would like to take a minute and share you an experience with one of my logistics client who was a 3,000 crore company. They had like multiple ERPs, okay, 3 different systems. In one of their system, the purchase register, they were not able to extract the invoice number. Okay. we helped them doing some exercise that was not helpful. They internally did one exercise that was not helpful. They called the IT spokesperson, that was not helpful. And finally an independent consultant came in the picture, and it was just that the query had the field name with a space. Okay, the actual field name was not having the space, but the query which they have written was having a small space. That took actually more than 6 months to identify what was the problem. So absolutely right, sir. Identifying the problem takes time. If you have any automation around it, things become a little bit faster in that sense, right? We will also ask Rajiv sir, what is your view on the same, like a GST automation? How does it matter to a CFO, and how do we, actually it should be looked on a whole scheme of thoughts?
Okay, so I'll give you a micro and a macro answer. I think Varun has already covered it quite extensively. So I'll just top it up with a small micro and a macro answer. The micro answer is first, is that, for example, you've identified that these parties are not compliant or not uploading the GST returns, for whatever reason, as a result of which you are being in a mess. Now, what happens is that exercise always in many organizations happens as a parallel standalone exercise. What is very important is that knowledge of that has to get percolated down to your vendor master to say, when you're dealing, if anybody in the operations is dealing with a vendor, that vendor is tagged as someone who's a non-compliant vendor. That doesn't happen. It always cannot be a word of mouth. When word of mouth is possible when you have a handful of vendors. When you have hundreds and thousands of vendors, nobody knows, because the negotiation with the vendors is happening across multiple points. So how does that information that a vendor is not being compliant, and as a result of which you are having a loss of income, how is that getting communicated to the operations? And that only happens through a certain tagging process. And the tagging can only happen through an automation process. You cannot have Excel sheets floating around. Just a small example. So like this, there are many small things. Now the macro point. The macro point, Rohit, is we need to first look at the big picture. And I'm going to give an example which will just take 30 seconds. When you talk about when you say CFO, okay, if anybody asks what is CFO, Chief Financial Officer, that's an old thing. I am saying, think of CFO as an acronym. So 15 years ago, if you would ask what is CFO, somebody would define it differently than somebody would define it today. And I'll give you the two, how I look at it. C would stand for compliance. F would stand for functional knowledge. And O would stand for optimization. How do you optimize? That is the 15 saal pehle ka acronym. Mm-hmm. Today, the role of CFO has evolved. If you ask what is the role of CFO, C will stand for collaboration. Collaboration is not just compliance, it's compliance and collaboration with the stakeholders. F is not just financial functional knowledge, it's cross-functional knowledge. And O would stand for objectivity. So what I'm trying to highlight here is when the role of a CFO is growing way beyond from what it was, and he also has to do what he has to do, he can only do it if there is automation. That's all I'm saying.
Absolutely with you on that, sir. Well said. Right. Next, we'll move on to Ashok sir. Ashok sir, we have a pertinent question, sir. How CFOs actually evaluate the cost of strengthening the risk and compliance functions, and if you can also list down some factors that will influence your decision on that.
Okay, an unofficial version will be like this. See, first, all the GST officers are, unlike the service tax era, are not busy with the paperwork anymore. No, they are all very free, and you're going to have a lot of audits. So that's the first thing to be kept in mind. As days goes by, they're going to come back and dig out all the old records. The second point is the COVID era for the last 2 years, and maybe for the next 2 years also going forward, you're going to have a lot of attrition in all the departments, particularly in finance and tax departments. So people will be wanted. In any ways, as CFO, you need to understand that the law has to be complied, including the procedural aspects and also the new changes in law or business processes which come into place. So to do that, probably like how the other speakers have also said, probably you can have one set of software for ensuring instead of maintaining an Excel sheet, have a software for having reconciliations, for example, or having softwares for routing the returns, so that there's a maker and checker concept, so that returns are compliant. And also probably if you can have a compliance software which will be updated periodically by professionals like whom Rohit may refer or may on your circles. So what combination of all these three will probably bring in to reduce the possibility of mistakes and addressing the mistakes or other challenges on a daily basis rather than after the audit has happened. So GST law brings in the challenge that we need to correct or be ready for the transactions well before the time, unlike the VAT era where we were very comfortable exchanging C forms, or the CST era where so this is a very dynamic law. So when you talk of compliance and like how we have seen the rest of the session, a lot of notifications, circulars overriding the act, and the law being amended several times, and you also can expect some more rate changes is what we are told. So we need to align our systems to be compliant at various levels. So having consultants, okay, having a compliance software, okay, but automating your process and reviewing the compliance on a weekly, monthly basis, including the daily tracking of certain circulars and this impact, will be the way forward to handle the risk and compliance in the GST era. Rohit?
Yeah, got it, sir. Absolutely. I think that's the way forward. Daily notifications or circulars expected anytime after this, the new GST Council, right? Moving on to the next, we'll have both the versions from Varun sir and Rajiv sir. Today, actually, we are enjoying everything with phones, okay, and it's like one click. You want a cake, you have Zomato. You want groceries, you have Zepto, 10 minutes delivery. You want to even pick up your lunch from a home, it's Dunzo, it's couriers and everything. Medicine to top to bottom, everything is one click button, okay. But still, if this same thing concept is thrown or taken up to large corporates, why do you believe that many large enterprise still prefer the pen paper or Excel or a semi-automated tool, even though it does not take care of 100% accuracy? And what do you think, like, the biggest hurdle of 100% automation is there in like large corporates?
Who do you want to go for?
Absolutely. Varun sir, will start with Varun sir.
I think the principal reason stopping anybody from going towards full automation is mindset. I think it's a complete mindset issue. I don't think it's anything else. We can say it's budgets. Budgets. 30 years of working, I've never been in a corporate or in a role where budgets have been sufficient. Still work happens, right? We did a study recently, not recently actually, it's more than a year and a half ago. And we found more than 50,000 Excel sheets in our system. Mm-hmm. Basically exchange from one person to the other, not, that's a lot of Excel sheets. Okay. I think it's just comfort. We are used to working in a certain way and we don't want to adapt to a different way of working. Okay. My personal view is doing all this actually breeds inefficiency. And it is to some extent even a human psyche that if that inefficiency exists, my presence is ensured. Right? Moving on, I think a part of the problem also is that some of us have got a host of IT systems, and IT systems by their very nature don't necessarily talk to each other. Okay, so that's the institutional problem where we say, how do I get my legacy system, which I got 15 years ago? It's not capable of doing what we need today. But the effort, not the cost, but the effort involved in revamping the whole thing is too great. So Excel is a quick fix. Okay. And I think the more quick fixes we keep on doing, the more we keep on falling into that trap of saying, "Kaam chal raha hai, chalate raho." Okay. I think that's my experience. I have been involved in completely revamping an ERP, moving from a .NET system to an SAP in 7 months. It's possible. You just need management conviction and a certain drive, and it happens. I think people are willing to change. It's the top, perhaps, which is my view. This is top down and not bottom up.
Rajiv sir, your view.
Varun doesn't leave me a lot of things to say, so but I still. Okay, see, any change management is never bottoms up. It can be suggested bottoms up, but has to be driven top down. Okay, let's be mindful of that. Now, therefore, lot depends on the leader, the priority and the vision of the leader. Often, the leader may have a vision, but it doesn't fall as a priority because he may have other priorities. He or she may have other priorities. तो जब तक ये चल रहा है, जब तक टूट नहीं रहा है, जब तक it's not broken, चलाते रहो. Okay. So I think vision and priority are the first point that I would like to highlight of the leader. Because if the leader wants to drive something, he or she will be able to drive it. I don't see an obstacle there. It's about your conviction, as Varun said. That's one. Second thing is apprehension. Where is the apprehension? You know your finance part, but do you need IT support? You need the technology guy to give you the confidence that they understand what you need and will be able to help you configure it. Now, many technology guys are techies. They may not be business savvy guys. And very often that gap in the understanding or the perceived gap in the understanding comes in the way. So if there is a technology which is easy to plug and play, we'll obviously find more relevance vis-a-vis a technology which needs a change in the configuration, blah, 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 etc. Third, my thing is that today many of these technologies are plug and play. And the cost is not at all exorbitant. It is rounding off. So I don't think the cost is at all in this kind, is not capital intensive. So coming back, it's basically the priority and the vision of the leader and the ability of your IT team, or the confidence in the IT team, let's put it, of the finance guy in the IT team, to be able to deliver seamlessly. I think if this is there, I don't see any challenge.
Absolutely. I am with you. I very much relate to Varun sir when he said that, till the time inefficiency is there, my job is there. Last my ex organization, we wanted to do automation where it will save somewhere around $1 to $6 million. Okay, the quantification started from 1 million and it can go up to 6 million. And when we planned of doing that automation, there were 3 people coming to me. This is the only job we have. If you actually take up, then what are we supposed to do? So in that situation, I was in fix. I did not have an answer. I told them, I will get you answer maybe after a week, but definitely before starting, I'll give you an answer for that. So yes, sir, I can relate that as well to you. Right. So I think we had a very wonderful session. Many queries, many eyes, opening eyes. We had it today on the session. Thank you so much, speakers. Thanks a lot for having us and having a nice question and answer round, throwing your insights. It will be very helpful for our listeners as well. Right. I will take up an opportunity here to introduce Shamim. Shamim can come on the stage here. Yeah, Shamim is having a 7 years plus experience in the field of ClearTax, SaaS, and all that. As Rajiv sir rightly said, that capital intensive is not there in today's world. Today's world brings on SaaS, pay per use kind of model. I will buy only 10 things and I will pay only 6 rupees. I'll buy 20 things, I'll pay you 25 rupees, and so on and so forth. Is that kind of roadmap. Shamim will be there to explain the ClearTax offerings and functions. Before Shamim starts, any last thoughts and insights from our panelist members and speakers?
From my side, I think I just need to thank the views that the co-panelists shared, which is Varun, Uday, and Ashok. And I think, Rohit, you moderated the session very well. Those are the only points from my side.
Thanks, Rajiv sir. Thank you.
Thanks a lot. Echo completely what Rajiv said. Thank you for all the co-panelists and to you, Rohit, for managing this so well. Thanks a lot for the opportunity.
Thanks, Varun sir.
Thanks, Rohit. Really appreciate. And all the co-panelists, I think very well discussed, and a lot of take home back we can implement. I think it will do world of good to us.
Thank you, Uday sir. Thank you,
Rohit. Yeah, thank you, Rohit, and all the co-panelists and all the listeners for their patient hearing. I think it was fairly discussed. I think the message of compliance and having automation and software has been the bottom line. Thank you so much.
Right. Thanks, Ashok sir. Thanks a lot. Shamim, all the floor is for you. Please stay back to understand the offerings from ClearTax. It will be a brief session, 15-20 minutes, and we will guide you that entire process. Shamim, all yours.
Thank you, Rohit. I hope I'm audible.
Yes, you are audible, and we can see your screen as well.
Great. So it was like a very informative session. I was there throughout, and so in continuation to what we have discussed, right? So throughout the discussion, we heard the panelists talking about the new compliance challenges, the automation, the artificial intelligence, etc., etc. So we ClearTax offer the right set of solutions to help you with respect to each of your compliance-related challenges, right? So I'll just make it very quick. I'll not take more than like 10-12 minutes of your time. Right. So, the introduction part, I'm sure everybody would have at least heard about ClearTax, if not already started using us, right? So, just to talk about the segments that we are present in, right? Currently, we have 3,000 plus customers, enterprise customers, using Clear solutions for various challenges, or maybe for various tax compliance related problems, right? That's on the enterprise side, and we also have presence in a couple of other areas where, like for example, the consumer segment. So we initially started ClearTax with the income tax filing portal for consumers. We currently have about 6 million plus consumers on our platform, and we also have presence in the SME segment as well as the CAs and tax experts, where we have 30,000 plus users on our CAs and tax expert segment, and 6 lakh plus users on our SME segment. Right. Just to showcase how ClearTax or Clear has grown over the last 4 years, right? So if you notice here, financial year 18, we used to process about 52 million invoices, right? And that over the years has currently crossed like 195, 200 million invoices that flows through the ClearTax engine, ClearTax solutions, ClearTax platform. And if you put a monetary value to it, if you consider the GMV, it is like 325 billion US dollars, which is a significant portion of even India's GDP. And some key metrics you can see on the left-hand side. We process more than 4 lakh returns every month. We help consumers or maybe enterprises process around 6 million plus e-invoices every month. And about 15% plus of India's large enterprises, including recent startups, use ClearTax software. We power their compliance through our Clear platforms, right? So jumping right to where we discussed till now, right? It was very evident that technology is very important or inevitable in the compliance area, right? So if you talk about technology in compliance, right, we can classify it into 4 different phases, right? So starting from the first phase, manual compliance, where the technology use is very limited, where whatever offline solutions the government provides. So this might be like most of the SMEs or small scale businesses will be doing manual compliance even now. It then came assisted compliance when companies or maybe the GSP solution providers launch software solutions to do the reconciliation or maybe to do the filing, right? And that again was through Excels. You download the report from ERP and then upload it to another software, then get the reconciliations done, etc., etc. That was assisted compliance. Then most of the enterprises are currently now in integrated compliance phase, where the ERP talks to a third-party software. The data sharing happens seamlessly from the ERP to the software, and from the software, the compliance-related things like maybe your 2B reconciliation or the GSTR1 form preparations, etc., take place in the software. And so, and plus e-invoicing came into picture. So the e-invoicing software or maybe the GSP software provider's system is connected with the ERP. So the data sharing happens seamlessly. In this way, the integrated compliance phase, most of the enterprises are currently in. Now, with the recent changes in compliance as well as the suggested changes in the recent budget, right? Now the era has come where you have to move from integrated compliance to a real-time compliance phase. So in a real-time compliance phase, you will have to have a fully automated system, like at least for example, for reconciliation. Now, if the vendor is non-compliant, you are at a risk, right? So before releasing every payment, you will have to proactively check the compliance of the vendor and accordingly make a decision to block the payment or at least the GST component of the payment, etc., etc. Right? So for this to happen, many of the companies have a daily payments releasing, or maybe at least a weekly payment cycle, where before this cycle, you'll have to have this information readily available. For this to happen, this process has to be completely automated, right? The systems has to talk to each other on a much more frequent level, right? And also, like while onboarding a supplier, rather than relying on the vendor registration form, we will have to verify the details provided by the supplier then and there. We'll have to verify their filing statuses last 1 year. How have they been filing? Have they been filing on time? How many delayed filing they did, or how many times they have not filed at all? So things like that you will have to verify on a real-time basis. So the era has come where we have to move from an integrated compliance phase to a real-time compliance phase. Moving on, so now I will try to explain you what are the solutions that ClearTax offers or Clear offers to help you reach this real-time compliance era. Starting with the first product, right? Clear Identity. So this is a set of APIs for real-time KYC. It can be your vendor KYC. It can be your seller KYC if you're an e-commerce platform. Right? It can be your customer KYC, right? So the set of APIs include API for verification of GSTIN, verification of PAN, verification of the bank account, verification of the MSME status, so on and so forth. So using this, right, in your ERP itself, once it is integrated, you will be able to get the compliance status. You will be able to verify, like for example, the GST number, whether it is in active state, cancelled, suspended, blocked, etc. Their compliance status last 3 years or since 2017, their filing dates for GSTR1, 3B, or any other returns. Right? So all this it will instantly come to your ERP and it will get saved. You can also use this to auto-populate the remaining fields. Like for example, once you fill in the GST number and click on verify, the legal name, trade name, address, status, etc. will be auto-filled in the rest of the fields in the ERP. Right? So that's about Clear Identity. Talking about Clear Capture, so this is another new solution that we have launched. This solves the problem of data entry. So for compliance leaders, right, or for the users who do compliance for enterprises, one of the most challenging area is wrong data that is input in the system. So when somebody manually enters the data, like for example GST number, instead of 1 they would have put I, instead of O they would have put 0. This is a very common thing. Right? And that data enters the ERP, and then that becomes a challenge while doing a reconciliation. Then again, they will have to go back and correct the root cause, or maybe correct in the vendor master. So instead of doing this as a manual exercise, what this Clear Capture does is once you get an invoice, it can be through email, it can be a physical copy. You just have to scan the invoice. If it's a physical copy, you just have to scan the invoice. The scan image will go and sit in a shared folder. From there, ClearTax will pick it up. We will read the invoice. We will parse it. We will convert it into a purchase register. Right? So it's not a regular OCR based technology. So our technology is far more superior. So when I say superior, what it also does is, apart from scanning the text in an image or in a PDF file, we also verify the contents. And when I talk about verification, right, I'll highlight one important area. If you take now e-invoicing threshold, as you all know, e-invoicing threshold has come down from 50 CR companies to 20 CR companies. Now a majority of your vendor base will be eligible for e-invoicing. Now assume a scenario where one vendor, okay, from 1st of April, one vendor is eligible for e-invoicing, but he has not started doing e-invoicing. Now, as per the e-invoicing rules, if a e-invoicing eligible vendor is not generating e-invoice, then that invoice itself is invalid. And government is not stopping them from generating invoices or uploading their data in GSTR1. So a credit will be visible in GSTR, in your 2B, and then you will be claiming the credit. But as per Rule 38 of CGST or Rule 48 of CGST, you need to have a valid invoice to take the credit. So it's a contradictory thing. So what Clear Capture helps you is, we will scan every invoice. If at all one invoice do not have QR code, the e-invoice QR code, we will check the GST number in NIC portal whether they're eligible for e-invoicing. If they're eligible and the invoice doesn't have QR code, we will highlight it to you. This is a potential high-risk invoice for you. They are eligible for e-invoicing. This doesn't contain the QR code or e-invoicing data. That is one thing. Secondly, if it has a QR code, then we will scan the QR code and we will verify the contents. Whatever mentioned on the QR code are matching with the contents on the invoice copy. And we also verify whether that e-invoice is still valid. Because what if the vendor has generated the invoice and then canceled it within 24 hours, right? So that's the first part of scanning invoices. If at all it comes, you have a common email ID where all the invoices come. Right? We can scan it we can take it up from the mailbox itself and then do these processes. That's about Clear Capture. Now, Clear Invoicing, this solves another peculiar problem largely related to online companies, right? So companies where the transactions happen online, like maybe an e-commerce platform or any like consumer platform, as per the orders generated in the platform, invoices has to be generated then and there, right? So every transaction should be supported by a valid tax invoice. So how our solution helps is, we provide APIs for this. So whenever an order is received on the invoice e-commerce platform or online platform, right, immediately from the details collected from that order, invoice, the tax compliant invoice will be generated, including the digital signature, including the e-invoice if it is a B2B transaction, or including the B2C QR code if it is like a B2C transaction and it is eligible for the seller. So one API to manage all the compliances with respect to invoice. And digital signature is a major challenge for all the online companies, right? So even if you are able to generate an invoice, how do you automatically put digital signature? That is a challenge. So we have solved that part also. So the invoice that is generated in our system, right, it will contain the digital signature as well. Moving on to the next set of solutions, right? So Clear Max. So Clear Max is again largely in line with the idea of real-time compliance. And Clear Max ITC is one of our flagship products, where you can put your ITC journey on autopilot mode. And we are actually doing it for customers now. When I say autopilot, what will happen is, so the ERP and ClearTax will talk to each other in an API, through an API, which will be like two-way communication. So what will happen is, like, for example, on a daily basis, right, we add a lot of purchase invoices into our system. So end of the day, you can have a scheduled activity. For example, 8 p.m. at night, every day 8 p.m. this activity should run. We are configuring the system. So once it is 8 p.m., what will happen is the ERP will push all the purchase register.
Shamim, we got stuck, Shamim. Shamim, if you can hear us.
Yes.
Yeah, we got stuck last 20 seconds. We got stuck. Audience and participants, please wait for 1 minute while Shamim is reconnecting. Yeah, audience, Shamim has joined again. Just a second. Shamim, if you can hear us, we are not able to hear you if you are speaking.
Should I?
Yeah, now we can hear you. Now we can hear you. Good.
All right. I'll just start sharing again. Sorry for the inconvenience.
Yeah, you can turn off your video and
I did.
if your network is low, no issues.
Is my screen visible now?
1 second. Yeah, visible.
Yeah. So I was talking about the Max ITC process flow, how it will help you, right? So every day at a scheduled time, the ERP will push the data to ClearTax. ClearTax will automatically download the 2A, 2B. ClearTax will do the reconciliation, and ClearTax will do a vendor risk categorization based on the vendor's previous filing history. So if last 3 years, 4 years, if the vendor has been filing regularly or not, how many times they have delayed the filing, not filed, etc. Based on that, we will assign a risk category like high risk, medium risk, low risk, and compliant vendor. So if, as per the reconciliation, a vendor's invoice is missing into it is a high risk vendor, then ClearTax, along with the reconciliation result, right, we will also send you a payment suggestion, whether to hold payment or hold at least the GST amount. And then this suggestion, along with the reconciliation result, will be sent back to the ERP. Right? And in the ERP, you will be able to see the transaction details, the reconciliation status, the payment suggestion, and which will be visible for the AP team also. Now, I'll give you a scenario. This is very important because most of the area that we have discussed during the panel discussion, right? This will help in all the compliance related, ITC related challenges at least. Right? So I'll give you a scenario. There is an invoice which is due for payment tomorrow. It is a high value invoice. And during this exercise of reconciliation and vendor risk categorization, it was found that that invoice is missing in 2A, and it is the vendor is categorized as a high risk vendor. So in this scenario, if you release the full amount to the vendor, then you are at a risk of losing out the ITC component. Right? So what ClearTax will suggest in this scenario is hold at least GST amount. And in this decision, or maybe this payment suggestion, will flow back to your ERP, and the AP team can see this. Okay, when they're releasing the payment, okay, the action suggested is hold GST amount. Now we go a step further, like in ERP, right? We can configure a system in such a way to automatically break up an invoice into two parts, the base component and the tax component, and release only the base component. Even if the AP team executive tries to release full amount, the system will throw an error saying that as per the recon exercise, it is hold GST amount, and the only base amount can be released now. So in this way, we can avoid ITC loss because of vendor non-compliance. And this is the core functionality of Max ITC. There are a host of other features as well, like configuring your own custom rules for recon. So there are some companies which come back to ClearTax saying that, see, we are using ClearTax software for reconciliation, but we have one peculiar problem where it is not getting solved. So in such a case, we will understand this problem, and whatever custom logic has to be fed into the recon engine over and above the fuzzy logics that we already have. Right? So you can suggest logics, and we can build it in for you. That is one feature. And regarding vendor communication, we also have a vendor portal where two-way communication can be done. So in the current system, right, everybody does a bulk communication, and in that bulk communication, it is difficult to track how many of them responded, how many of them opened your mail, etc. But in this system, right, you'll have complete visibility. If you have sent out 100 emails, how many of them bounced back, how many of them were opened, how many of them got replied to, or maybe you got a reply, and you can see it as a thread in the system itself. And you can have two-way communication through our vendor portal. So that's a quick glimpse about Max ITC solution. There are a lot more features, but due to the time constraint, I'm just highlighting the key features. Coming to Clear TDS Max, again, we have APIs that can be integrated with the ERP to fetch the details from ERP for TDS filing, TDS preparation, filing preparation, etc. And we're also coming up with real-time APIs which can determine the rate of TDS. We can check the LDC applicability. We can check the TDS section, auto assigned sections based on the narration. So a lot of artificial intelligence is being used in these solutions, which are aimed at real-time compliance. Right. And then comes our Clear Compliance Cloud. So for handling the GST, for e-invoicing, for TDS, etc., we have standalone softwares as well, which can be like one-way integrated for sending the data from ERP to ClearTax. You can use these softwares which can be integrated, and it's just a unified package where this all the base compliances, right, the GST, the TDS, and the e-invoicing, e-waybill will be taken care. So as you have noticed, like earlier we were known as ClearTax, now we have rebranded to Clear, right? So that is because we have gone beyond taxation now. And then Clear invoice discounting is one such area that we have recently started. So if you have a scenario where your vendors are requesting for early pay, so ClearTax provides a platform where the vendors will be onboarded by ClearTax, and whoever needs early pay, they can come to the platform which will be integrated with your ERP. All the purchase invoices will be appearing there, and the vendors can apply for an early pay at a discount, and your approving authority can approve it, and both the parties will be happy, right? So the vendors will get early pay and you can enjoy a discount. So it's a win-win situation. So that's about Clear discount invoice discounting. Clear Max dashboard. So during the panel discussion, we also heard about analytics, tax analytics. Right? So Clear Max dashboard is a analytical tool, analytical dashboard, which will help you proactively flag your compliance risks. So basically, we will give you insights on your taxes, on your working capital, on the vendor compliance, etc., etc. Like for example, what is the impact on your working capital due to vendor non-compliance? Who are your top non-compliant vendors? How much ITC is blocked currently because of vendor non-compliance? Right? Or maybe is there any unutilized ITC available in any of the GSTINs? Or maybe your ITC optimization, ITC utilization, working capital impact. So all these will be highlighted in our Clear Max dashboard. So it is a real-time dashboard. You can anytime come in and then look at the details, and you can avoid like notices because of non-compliance or compliance risk, right? So that's about Clear Max dashboard. Talking about ERP integrations, right? So for all the solutions that you see on the screen, we provide APIs and we provide integrations with the ERP. And we have in-house integration teams. So we have a SAP team, we have a custom ERP team, we also have Oracle, Microsoft, all the standard ERPs, which allows API connection. We can integrate, we can take it up as an in-house project, and we can deliver the end-to-end solution for you. So we have built that capability, and we have been doing it for the last close to 1 year now. The last but not the least is about tech-enabled managed services. So in case if you want to outsource the compliance completely to ClearTax, whether it is GST, whether it is direct tax, indirect tax, or any other specific requirements, we have a team of 100 plus highly experienced chartered accountants who are primarily ex-Big Fours, right? So you can just outsource the entire activity to ClearTax, and we will deliver it with utmost quality. Quality is something which we cannot like forgo, or maybe we give utmost importance to. Right? So we can do it as an outsourced activity for you. So that is about the solutions, or at least some of the solutions, key solutions that ClearTax offers. And I believe like we are able to solve the compliance related challenges for 3,000 plus enterprise now. And in case any of you would like to know more, we'll be happy to connect with you, and we can discuss in detail about each of the solutions at later times, right? So I think that's pretty much from my side. Over to you, Rohit. Rohit,
Yeah, Shamim, I'm there. I'm there.
over to you.
Yeah. So thanks, Shamim, for showcasing us with the entire suite and offerings of ClearTax. Thank you all participants for having us and listening us patiently. We have noted down few mail IDs from the chat box. We will connect to you shortly separately. After this, you will also get a feedback mailer. Do write us on our feedback to even connect with you. You can also write it in the same feedback so that our team can reach up to you and you can also connect with our team. Thanks a lot for the time. And also people have asked whether this video is uploaded on YouTube. We are just checking on that library. Once that is there, we will also circulate the link of that particular library. It will take some time, but for sure we are going to do this same as well, right? Thanks a lot, and we will end this session here today. Hopefully it was informative and insightful for you, and thanks a lot for attending once again.